Hey traders, today I'm not just showing you a chart. I want to talk about something most traders never really learn until they have already lost money. We are looking at gold versus US dollar, but what we are really talking about is structure, patience, and how to actually read the story the market is telling us. So let's dig in. Let's have a look at this H4 chart. First of all, on the 4-hour chart, gold is sitting right around 33.55 and 33.60 zone, a clearer resistance zone. How a clear resistance zone? Let's have a look at it. First of all, 33 around 55, and overall it go to 33.68, but 33.60 is my zone. And from my previous videos you must have heard that as far as I don't get a breakout of it, I will consider this gold bearish, but it doesn't mean I'm taking or allowing any sell ideas before one watch this particular video. So this is a very much clear resistance. Now if you have been trading for a while, you know, and even if you watch my videos, you know this moment very well. This is when people start getting excited. Some traders jump in thinking it's a breakout, others try to sell early expecting a big drop. But what I want you to pause and think for a while. This level has been respected before. Sellers have stepped in here multiple times. Let's have a look at it right here. By multiple times, I mean to say multiple times. Even this, you see, market tried to reach there. Still this level hold the market. Similarly right here, we have multiple touches, multiple reactions, multiple trading behavior we have seen to the sell side at this particular zone. So the big question now is, will this level break with strength or will price get rejected again? Most traders make the mistake of reacting too fast, my friends. They see a big green candle and think, that's it, it's going up, let me take it. But they don't stop to ask, how is after all price reacting? What's the behavior? What's the story behind the move? That's where real trading begins, my friends. Now let's zoom into the daily chart. This is where it gets clearer. Gold has been respecting an ascending trend line since April, and that's a sign of strength. Ascending trend line. Ascending means a trend line that is going up. In simple words, we can say bullish. So this is ascending, right? In technical terms, we call it ascending. And even if you see right now, the market structure or this ascending trend lines seems to be as this. So market is sitting right on top of this trend line, and last week this trade I gave, so it hit the targets of 722 pips. Congratulations everyone. So daily chart gives us an ascending bullish trend line. Gold has been respecting this trend line. If you see right here and right here. So remember, buyers are still in control for now. Price has been making higher lows again and again. See this higher low, this higher low, even this is a higher low. If price gets rejected here, no panic. It might pull back to 33.10 or test the trend line again. That's like completely normal. It will be a pullback or a retest of the trend line if it rejects from 33.60. But if price breaks 33.60, remember, and holds above with momentum, we could see it head toward 34.20 or even higher, or maybe 3400. That is this breakout. But obviously we cannot confirm if a breakout is going to occur or not. So a breakout, a simple breakout, and then it is going to retest these highs. You see, highs of all times. Either way, we are not guessing. We are not forcing trades. We are reading structure and waiting to react like professionals. Okay. We are here not just to lose money. We are here to make money. And this is how, out of these simple setups and structures, we make that money. I'll tell you honestly, most traders don't lose because their strategy is bad. They lose because they don't understand structure. They just chase candles, they trade with fear and FOMO, they hedge without a clear reason, they get emotional. So, lack of structure knowledge leads to confusion, my friends. It will lead you to confusion, panic, and obviously, as a result, losses. But remember, when you understand where key zones are, just like I explained right now, the key zones, when you recognize how price behaves at those zones, then you gain control of it. You become calm, you trade with clarity. So, trading isn't about being right every time, it's about being on the right side of the structure. Structure tells you where the big players are acting, it tells you where buyers and sellers are trapped. It tells you when to wait, when to enter, and when to stay out. So, here is what I'll leave you with. Let the structure guide your decisions, okay? Let the structure guide your decisions. Don't go without structure. Don't ever ignore the structure. Because after all, this is whole. This market is comprised of structures, nothing else. So if one ignores it, means they are ignoring the market. Don't rush, let price prove itself. Be the trader who observes and understands, not the one who guesses and reacts emotionally. So this is the very simplest weekly forecast for gold I did, and let's see what we get in the upcoming week. If this helped you see things more clearly, hit the like button, comment below. Are you buying, watching, or waiting at this level? And always remember, it's not the candles that move the market, it's the people behind those candles. If you learn to read them, you will never feel lost again. Take care, trade smart, and I'll see you in the next forecast, inshallah. Goodbye.